Hey guys, in this video I want to go over investing in income paying stocks. I've got two amazing stocks for you today and we're just going to dive into it and take a look at them. It's important though, before we begin, that you choose income paying stocks with a proven dividend growth and strong businesses. All right, because we have to balance the yield or the amount that dividend stock is paying you against the risk of dividend cuts. So I would caution you against just going out there finding the stocks with the biggest yields and investing in those, because there is the risk of dividend cuts. And you have to find strong businesses. If it's not a strong business, if you don't have that good core strength, then I wouldn't do it. Number one is Bank of America. And Bank of America is not, it's a household name. It's not a stranger to anyone. The ticker for Bank of America is BAC. And first of all, let's take a look at their growth mode and risk assessment. Their previous dividend cut during the Great Recession may be a concern for some risk-adverse investors, but they now operate more conservatively due to new regulations and business changes. They haven't actually returned to their pre-dividend cut highs, indicating that management's focus is on consistency. And when we look at the company overall, Bank of America, like I said, it's not a company that people haven't heard about. It is among the largest financial institutions in the United States and globally. They successfully navigated early 2023 bank runs, and really what that shows us is that this is a stable company and it's something you can depend on. They offer a wide range of services, from traditional and investing banking, global banking, wealth management, you name it. But what makes this pick so attractive to me, the reason that we're talking about today, is because they've had steady dividend growth for a decade now. So they've established that they grow their dividends. The current yield is approximately 2.7%. And I know, again, that's not the biggest number out there, but it's consistent and it's consistently growing, and it's near the highest levels over the past decade. They're well positioned to handle any interest rate increases with a tier 1 capital ratio of 11.8%. So that's stock number one, Bank of America. Stock number two is actually a REIT, and it is Realty Income, and the ticker is just O. And when we look at the industry and in economic impact, REITs face challenges from rising interest rates that are increasing their capital costs. And there's a lot of downward pressure on stock prices that's presenting right now a buying opportunity, and that's why I wanted to put a REIT on this list. Their dividend is reliable. They've increased their dividend for 29 consecutive years. Wrap your head around that one. Their current yield is 5.9%, which is very attractive, both historically and just absolutely. When you look at their business strengths, they're an industry giant with scale, financial strength for significant deals. They've been expanding into new areas, new regions, showing their growth potential, even despite the interest rate challenges that are happening right now. So those are the two stocks that I picked today. Both Bank of America and Realty Income are suitable for long-term dividend growth investments. Both of these companies would be great picks for those that are looking for those income-paying stocks. Bank of America offers the potential for significant dividend growth post Great Recession, and Realty Income provides a high, reliable yield with a solid dividend track record. So, even if you're investing $500 into these companies, that can start building a position in these industry-leading companies. Now, I do have to say, guys, I'm not personally invested in either one of these companies, but I do post a video here every single week telling y'all what companies I'm actually putting my money into, what I'm actually buying. So if you're not a subscriber, hit subscribe, join the community today. Bank of America, it's a solid choice for those that are preferring a US-based bank with a focus on diversity and steady dividend growth. Realty Income is appealing for yield-focused investors, and it offers a high yield and reliability amidst expansion efforts. Guys, that's it for today. Be sure to leave a like, leave a comment down below. Let me know if you're investing in these companies or if you're thinking about it. Or maybe you disagree and think that these aren't good investments. Let me know down in the comments. Anyway, guys, I'll catch you later. Take it easy.